as needed.
Yeah.
Cool. How are things with the credit unions?
Oh, good.
Yeah.
Yeah. Good. Quiet right now. We had an active year with tax reconciliation in DC.
Oh, really? Oh, wow.
Every time taxes come up, we should look. Good friends of the bankers association will bring up our tax exemption. Go some of that. To it, put out that fire once I am. So
We had to, you see quite a bit.
yeah, it just depends on the situation, but at least 3-4 times a year. Yeah. But sometimes more, but this year that's probably about what it's been.
You know, these are.
The auditors have done a really good job in summarizing a lot of the data. which
Those
is
online,
helpful.
can you hear us in the room?
Oh, I meant in the capital,
Oh,
building
the
project.
capital.
yeah, well,
Yeah.
yeah. It's up in the,
Well, that little project.
yeah, that middle one.
I thought you were talking about the important stuff. Like,
Well, yeah,
that
of course, yeah. Will that be done before the session?
That's the plan, is to have it pretty much completed, so that by session they
Can
can.
anybody who's online
Sounds
confirm that
good,
you can
Lisa.
hear us in the room?
Yeah, I can hear you.
Yeah,
You
we
get a
hear you.
chance to go through the new building, it's a
Thank
cool
you.
building.
Do they let,
Yeah, like it, well,
they'll
I
let
don't know.
riffraff like me in?
yeah, yeah, you have to schedule that. Well, you can get you through. They got a cool like atrium over there. It's like a stained glass atrium, if you look up there. Kind of a cool spiral staircase that comes down.
Dan, would you say something so I can check the audio in the room? Hello?
Dan?
Speak up.
Oh, yeah, can you hear me?
Yeah, we're just testing the audio, so,
Gotta get it to the right level.
yeah, can you say your name?
Yeah, Dan Gardner. Test.
Okay.
Yeah, that's great, thank you. You said the alphabet.
Sorry, I can't be there in person today. I'm recovering from COVID, and imagine you don't want me in the conference room with you, so.
Oh, nice.
Thank you for not sharing.
Yeah.
Guess we don't know who will be here.
Who isn't here? We're waiting on.
Yeah.
Jason can't be here today.
Oh, there she is.
Let's see, we
The,
have
the straight edge here really is a problem, huh, Brittany?
I know it is.
We don't realize who's in the room.
The auditor's office on the other side of us.
Well, just earlier, I'm like, how come Alex is not joining in person? Cause I was looking up on the screen, I saw a screen that he's like sitting there.
I did feel a little weird.
Let me go adjust your camera for you.
We're at 3:01. We give people a little more time. I haven't started the recording yet.
Okay,
But before we get started, I'm just going to apologize. I'm gonna have to leave. I have to be up at Utah State event tonight, so I will leave. I have to leave by 4, so.
okay. Let's see, we have quite a few name tags that's doing,
We have a few online though.
yeah. So,
Maybe get started.
should we get started?
Oops.
All right, well, let's,
Yeah.
yeah, let's get started, I'm just
One second, let me
thinking,
resume the recording.
okay. Maybe. I guess we're okay. All right, welcome everyone to the Asset and Investment Review Task Force. Today's September 30th, 2025. And we've got quite a few folks joining online and here in the room at the Capitol in Salt Lake City. So let's just briefly go around and make quick intros for everybody starting here in the room. Marlo Oaks, State Treasurer and Chair of the Task Force, and we'll go clockwise. So
Brittany Griffin, I work in the Treasurer's Office.
Alex Nielsen, I work with the Office of the State Auditor, the assignments.
Matt Dojo, Stiefel Nicholas.
Rusty Cannon with the Utah Credit Union Association.
Billy Hesterman with the Utah Taxpayers Association.
Tina Cannon, Utah State Auditor.
Kurt Slaw, I'm in the Office of State Treasurer as well.
all right, and then online.
Yeah, Dan Gardner. I'm the Chief Examiner for the Department of Financial Institutions.
Patrick,
Patrick Daly. I'm a principal and founder at Tour Partners.
Lindsay,
Hello, Lindsay Mueller. I'm with Tour Partners as well.
Mark,
Mark Stisser with Tour Partners.
Todd,
Todd Hopper with Granite School District.
Brooke,
Brooke McCarrick, Utah Attorney General's Office.
Senator. Senator Stratton. Oh, did we lose him? We'll come back. Kim,
Yeah, so
Kim Jackson, Utah County Treasurer.
there's the senator.
Thank you. Sorry, Kevin Stratton, Utah Senate. Glad to join you all. Thank you.
Jonathan,
Jonathan Ward, Science Public Finance.
and Jason.
Jason Nielsen, Office of State Treasurer.
all right, excellent. Welcome. First item of business is approval of the minutes from the August 15th, 2025 meeting. Are there any questions on those minutes or comments? Hearing none, I will entertain a motion.
So moved.
And is that to approve the minutes? Thank you. Do I have a second?
Second.
And all in favor say aye. Aye.
Aye.
Any opposed? That motion passed unanimously. Thank you. All right. So the second item, the investment study. So we've got University of Chicago and TUR partners that are working on the investment portion of this study and looking at whether placing a portion of public reserves on deposit at local banks can provide added value to Utah's economy. So this will be the first, I guess, report that we will hear from them. The next one will be at our next meeting. Is that right?
Yes.
Our next meeting. Okay.
Next meeting on November 3rd.
On November 3rd. Yeah. So this is just really kind of their initial report. So we will turn the time over to TUR partners and the University of Chicago.
I just want to say, first of all, it's a great privilege to be talking with all of you guys and walk you through our initial draft findings. We've focused the preliminary part of this on looking at the overall banking sector in Utah. And we're also now starting sort of the returns analysis and economic impact. But we're going to focus this preliminary on our preliminary findings of the banking sector in Utah. Go ahead, Lindsay. And this just is a summary of how we're looking at it. Both most of our data now has all been coming from the FDIC, as well as other banking regulators. So that's sort of where most of it comes in, along with some calculations, and we'll have backups in the appendix for all of our findings. Next one. So this probably isn't a surprise, but it's a nice chart. It just shows that since 2007, Utah banks have grown steadily. There's been, some states where this hasn't happened, but even given the financial crisis, COVID-19, and the sort of regional bank stress that happened around Silicon Valley Bank, the Utah banks have steadily climbed, and both assets and deposits. Next one. So the other deposits remain consistent with national trends. However, there's one thing to note for the banking sector in Utah. They never reached a negative change in deposits year over year. In 2023, due to the crisis of Silicon Valley Bank, a lot of deposits were pulled out of the system, but in Utah, they stayed steady. This is the Utah banks returns, and these are averages across all of the different size banks are in line with historical averages. So you can see return on assets, equity, and net income. There was a massive drawdown in 2009, as well as there was some losses in 2020 during COVID. But since then, they've recovered, and they're returning to sort of normalized averages for the last 25 years. This is a little bit technical, but I'm happy to answer any questions on it. So this is showing sort of the tier 1, tier 2, and total risk-based capital. And these are calculations done internally at the banks, and the regulators check them. And what this sort of shows is capital ratios through different parts of the financial crisis and different shocks. And surprisingly, they've sort of decreased since then, meaning either they're having less equity or assets collateralized against some of the risk. But it does appear that they're converging along a normalized risk since 2008. And this is, again, averaged, right? So we're looking at the overall Utah banking sector. We're going to get later to sort of a divergence here between different size banks. So this is, I don't know if this is surprising to anyone, but if you look at the banking sector in Utah, and this is also a trend that has happened nationwide. In the 80s, there was a tremendous amount of community banks. Community banks are defined by the FDIC, total assets below right now about $1 billion. And there's some other criteria to make sure that one is a community bank. And what this basically shows that the share of the community banking sector has shrunk consistently and is now at its lowest point. So as of right now in 2025, Q2, Utah has 28 larger regional or larger money center banks and 15 community banks. Part of the reason I think that if you look nationwide, there's been since the financial crisis, much more difficult to start banks. De novo banking regulations have increased, capital requirements have increased, the cost of compliance has increased. So the banking sector as an investment class hasn't been as attractive as it was prior to 2008. This is where I was talking about the divergence. And maybe something we can all talk about. So if you look at this is just in Utah, the major banks, 23 of the 28 major banks are well capitalized. So that means they can make significant loans based on deposits, and they're not at risk and they're under no restrictions from the FDIC. When you switch over to community banks, 2/3 of them are actually significantly undercapitalized. So only 33% of them actually could make significant loans based on deposits. The other ones would have restrictions placed on them. And there's also 5 larger banks that are undercapitalized. This isn't unique to Utah, but it's something to note within the landscape of Utah is that the community banks appear significantly undercapitalized. This is something in addition to show. So what we're trying to show here is the composition of loans between community and the larger non-community banks. They're both heavily dominated by real estate. It's no surprise that the majority of loans for both of them are on the secured real estate side. What the difference here will show is that the larger banks do more commercial and industrial loans. So those are to larger businesses. They also have a category of other loans as well as agriculture. And it looks like the community banks do a little bit more on the consumer side and the ag side. So this is just a blend across, and it sort of shows that, with money that could potentially be placed into these is where the loans maybe would come out. This is another chart that we all found interesting during our research. And what this shows is sort of the Utah government deposits since 2020 has surged to almost $3 billion. And if you look at the share of it since the early 2000s, it was in a couple $100 million. So there's been a significant increase since COVID, over doubling to, and this state and political divisions is an FDIC definition. And that includes all state, municipal, county, and it also falls into some of the authorities, sometimes water reclamation, some education authorities. It depends. We can delve into that further, but this is something interesting for all of you to note that there's almost $3 billion of deposits from Utah government. And the next portion of our study, so this will be the final slide we're going to show today. The next portion of our study is where we're looking at the returns assumptions. So I'm happy to, get input from any of you, any ideas you may have. So these are the PTIF return rates for the last 3 months. And what we have started with in terms of our modeling is taking the national bank deposit rates. So the FDIC reports these for savings, interest, checking, money markets, and CDs. And we're doing blended averages of those to sort of model out what the differences would be in the returns. So I'd like to open the floor to questions and, I'd love to get any input from you guys on sort of the direction we're going and any questions you may have on any of the charts.
All right, any questions for Patrick?
On that previous chart, bar chart that was showing the deposits over time.
Mhm.
Is there a chart coming in the future that would show, I don't even know if we can measure this, but what the expenditures compared to it would be? Like, I think it'd be interesting to know the ratio,
interest?
how much.
Or the collateral?
Yeah, the collateral more, it seems like maybe the question could be, and not that you have to answer this, are we collecting too much and allowing too much to be held by the government as opposed to the taxpayers?
Oh, so these are, I think what this would show is all of the counties and cities' checking accounts and savings account being held at Utah-based banks. So
Right.
it may just, I don't know what happened with that surge. It'd probably be a good question for you guys to look into, is why all of a sudden there was that much more cash. It may be cash from the federal government, but that's a lot of cash, almost doubling in 5 years.
Yeah. Yeah.
Yeah.
Okay.
That's
All right, thank you.
Tina's
Yeah.
been working on that. So.
Yeah, I know this isn't really the focus of the study, but I
Mhm.
just wanted to clarify the capital categories you listed on the.
Mhm.
You had a chart with the PCA capital categories.
Here.
Yeah, and for those that don't know, that's in federal regulation for the prompt corrective action capital categories. And I just want to clarify, currently all of the state charter banks are well capitalized. So I'm not sure what institutions are in this population, but I just want to clarify, there are no state charter banks that are currently undercapitalized. In fact, they're all in the well capitalized category. So
Dan, we can get you that list too. Significantly undercapitalized banks still operate and can be very, very profitable. They're just being closer watched by the federal regulators, and those are not state banks.
yeah, understood. Thanks.
So would this capture the state chartered banks?
Yeah. Marlo, this is Howard. Can you hear me? Am I?
Yes.
Yes, Howard.
Okay. Sorry, I'm up at my conference. I'm sorry I can't be there today. I'll be interested to see which institutions this represents, because this is a very unusual. Utah banks are some of the best capitalized, strongest, most profitable. I mean, I'd like to know who these 10 community banks are in Utah that are significantly undercapitalized. These are very foreign numbers to me. I don't know, Daniel, did you have the same reaction when you saw this, Dan?
Yeah, I think there's something that maybe off here, or maybe something that, we're not aligned with, because there are 35 state charter banks and they are all well capitalized. So I think somewhere here, this is maybe a different number or a different population, but maybe we can chat offline on that. But
Yeah,
tell you
and Dan and
35
Howard,
state charters.
we can get you the data set we're working off from the FDIC on this, so you guys can look at them, and we'll get all the names and everything are available. So we'll just send you a separate, sheet with everything.
Thanks, Patrick.
Yeah, I think it would be very helpful to have the department involved, because we look at this data pretty much on a quarterly basis with the department, and I've never seen a report that looks like this, to be honest with you. So I'll be very interested in getting that. I do think it's fascinating, the observation as to the dramatic increase over the last 5 years, and that's really exactly why we're all meeting here today, is to figure out, why that is, and then where the biggest economic bang for the buck is in terms of where that money should be invested.
Mm-hmm.
And that's what we're looking to you for some insights. When it comes to the yield slide, let's go back to that real quick.
Yep.
Yeah. You said that you were weighting that in some form or fashion.
Yeah.
Because
I think, yeah, and we can give you those, Howard. We're using different matrices, so it's like 40% CDs, 20% savings, 40% interest checking. Those are just what we've been playing with, and we're happy to work, get input from any of you guys on different weightings we can use for that.
Yeah, because as we talk about the excess reserves from this point, I mean, so I'm sure that some of the money in from the local government money that is currently in banks is currently in checking accounts, which probably yields very low, right? At some transactional account. But that's not going to change much. But if we have folks take money out of the PTIF that might, be yielding 4.4% and move it into a local bank so that it can turn into a loan in the community, again, and we're actually creating money and wealth at that point. That's not going to come in they're not going to add it to their checking balance. Their checking balances, I would guess, are going to remain fairly level. That's going to come in the form of, some kind of a time deposit with a yield significantly above the weighted yield of, which takes into consideration probably some transactional accounts that have no yield at all. So I think we need to, we want to compare that. But more importantly, let's say it ends up being 3 or 3.5, and a time deposit of some type, or maybe 2.75, whatever it might be. Yes, we know that there's a difference, but at that point, the bank is pretty much committed to lending that out in the community and the economy, and the economic dynamics of that is way beyond a 200 basis point differential in marginal yield, because we're actually creating money and creating wealth. So that's what I hope we get
and
to.
that and that's what I think. And Howard, it'd be great if you could we could work with someone on your end or in the treasury department to get maybe a weighted average of CDs or time deposits to use, because you're right. It's not, we're gonna weight it differently as we get more data. This is also national bank deposit data, right? So I would like to have something more specific, tailored for Utah based. And we know that rates are coming down, so all the returns are going to be down a little bit. So I think if we look at CDs and some other time deposits, we can actually compare better apples to apples. And then when we show you guys our econometric analysis for that, the value of creation of money, we can, we'll be able to matrix it all out a little easier.
Okay. I'm happy to work with you.
Any other questions? Great. Thank you, Patrick.
Thank you.
All right, the next item is the public entity reserves data. Alex, you've been working on this quite a bit, I know, and Audrey Cannon, is there anything you wanted to add before we turn it over to Alex?
No, Alex does this better than I do. Data magic.
Very kind of you. Yeah, so I'm gonna start out before we go to our dashboard updates.
And Alex, I don't know if you can scoot closer here.
Yeah, let me do that.
If that's where the audio is coming from. Yeah.
Right. Everyone online able to hear me okay? Got a thumbs up. All right. Let's jump into it. So we sent out that survey earlier this month. We sent it out to about 1,200 different local governments. And we got 250 plus responses, so pretty good response rates. We sent this to CFOs, CAOs, or other kind of primary contacts that we had in our state reporting system. These are folks that are uploading D&I reports, annual financial reports, or other kind of reports that the treasurer's office and the auditor's office collect. And these are the individuals that would be uniquely able to kind of answer these questions that our survey had. Had about 24 questions on it. And here's our responses by government type. So we had a pretty good spread, actually. We had charter schools and school districts came in as a cohort pretty well. I think we're at about 146 LEAs, so pretty good representation there. We had 9 of the counties. We had about 27 cities and towns, a few AOGs, 2 institutions of higher ed, 3 housing authorities, quite a few interlocals. And then PIDs and IFDs, these are public infrastructure districts and something financing districts. So yeah, infrastructure financing districts. We had 36, though that's kind of a misnomer because like half of them were them just saying we don't have any activity yet. So even though that looks a little inflated, I wouldn't put too much weight into their group. And then we had quite a few districts and RDAs. So takeaway from this, we had a pretty good representative sample. Obviously, we would like more, but a lot of folks are in the middle of their audits or they're doing audit adjustments and other reports. So we're still having more trickle in, but I think this is pretty good to make some kind of influence from. Now, before we get into the surveys, I wanted to talk a little bit about what happened outside the survey, which is we sent it out and then my phone and Brittany's phone and email just started getting hit with a ton of messages. And we had a lot of different questions, some people asking for clarifications about the survey. But what was interesting, and I think this group should be aware of, is we had a lot of different officers, whether this was a treasurer, a clerk, or some other kind of individual, basically be like, we have no idea how to answer this question. Can you teach us how to answer this question? Or they would say things like, you know, I might be able to answer this since I started working here a year ago, but 10 years, no idea. 5 years ago, no idea. And I think this mostly came from smaller to mid-sized entities. So I think this is probably a little reasonable if like the cemetery maintenance district person is tabbing this tape, right? They're not really into finance. They're more into just taking care of the cemetery. It was interesting how many cities and towns and mid-sized districts were also cities. So just be aware, those folks didn't always wind up in the survey results. So as we do inference and we take away from the survey, just be aware of that.
Was there one particular question they struggled with, or was it the whole?
Am I legally required to answer the surveys?
Yeah, there was a lot of those, right? People are busy, so is the survey optional? I think the 2 that I think had the most hangups were some entities do slightly different financing. So saying like, hey, what's your net position or what's your unrestricted cash and cash equivalents? They just don't think of those numbers based on how they do their financing or their governmental reporting. The other big question that had a lot of hang up was days cash on hand. A lot of folks wanted us to tell them how to calculate that. And you know, in fairness of like the survey question, maybe we needed to word it a little more clearly. We want you to tell us yours. It's okay if you don't have them. But that was probably the other kind of sticking point. Okay. Yeah. Any other questions on that? Okay, let's get into the fun stuff. So I really have dived deep into question 2 on the survey, which was, is there a trend in annual net position over the last 5 years? And what factors do you believe contribute to it? So I first started off by just doing a little text analysis. Don't worry, I read through all of them as well. So we're not just going to rely on data, but it's interesting to see which words are kind of connected. So I pulled out the top 15 keywords in this little network diagram here, and thicker lines are where words would correlate together. So you can kind of in the middle see capital and projects, and the words increase are kind of highly correlated just based off text frequency. We also see some things like new or interest. We also see district and school. On the right-hand side is just a bar chart of all keywords by frequency. Notice though, like increased, increase, and increases, really that's all like the same word, more or less. So if we remove those slight modifiers and just keep the stems, that's what this shows, where we've kind of combined them. And we can now see capital projects, interest rates now is an emerging kind of clustering of keywords. We see tax and revenue in the bottom hand side start coming out. So that's just kind of interesting. I like nerding out, wanted to have fun. But let's actually go into the most common reasons that were provided. This is from me going through reading about 250 of these responses. So by far and large, the largest motivator for a trend or change in net position is large capital assets and projects. Examples would be buying land, new school, large constructions of buildings, or saving up for a large capital asset. Then the next most common answer was PTIF, or gains on investments. And this is attributed to higher interest rates. And so people are just getting more money from their investments essentially. Then no surprise to this group, we've talked a little bit about this in prior meetings. Grants from state and federal, as well as the federal COVID stimulus, was another primary driver for that increase in that position. Another one was tax-based changes. So property tax and sales tax especially were referenced, where property values have gone up, tax base has gone up, or there's been an increase in sales that has led to an increase in whether it was a district or some kind of other entity's cash reserves. There's also some other taxes that were interesting to me. I'll talk more about these as we get into some of the other slides, but something like mineral lease revenue for a specific district who gets all their funding from mineral lease will have huge fluctuations depending on that federal lease tax. So interesting stuff. Now, and like, here's a great one that I just pulled out of here that like, I think would totally summarize like most of the answers, though we will get into some nuances, right? Then if you want to read through it, you can, but I think I summarized that okay. Another big trend was boards. So a lot of entities referenced our board is basically requesting or encouraging us to pursue this kind of financing strategy. Here's two of the answers here where you have the board basically saying, this is what we want. We want to have a buffer. We know times are a little crazy right now. We want to build up a larger kind of cash reserve. For LEAs specifically, most of them had large capital projects, but there were some interesting ones for them as a cohort. A lot contributed the increase to a growth in student enrollment and services, which has led to more FTEs. There was an increase in the weighted pupil unit that the state of Utah determined, which led to an increase in compensation as well. A lot of school districts are making sure that their compensation and benefits are increasing and lucrative to stay competitive. Then the ones I've highlighted were ones that I'm not sure if this group has talked about, so I wanted to draw attention. There were at least 4 or 5 that reference changes in the unfunded pension liability at URS. I'm not exactly sure what that is. Does anyone have any context on what that one would be? Do a little more research.
Well, it's the amount of unfunded liability is what they owe the pension. Mentioned, right?
Yeah, so there's
and so
yeah,
it shouldn't have an effect on their cash reserves, though.
well, to the extent that they need to fund more than they were previously expecting.
So would that mean they got park the money to do that? Therefore, that's part of the reason there's more money to save the people.
Right. Yeah, because then they would need to make more donations. Yeah, exactly.
Todd, I see your hand. You're going to be the guy to help us out on this.
That's kind of interesting because as a system overall, I think URS has been closing the gap in terms of unfunded liability, right? So I'm not sure if there's particular plans that are maybe different, but like, I didn't think that there was increasing unfunded liabilities of URS. I thought,
Yeah, I thought it went the other way.
that's what I was thinking.
And it could have been they were trying to say, you know, the question is phrased as changes in that position, so maybe that's decreasing. Yeah.
Okay.
Yeah, because I read it the other way, that means that what they thought they needed to pay.
Oh, so they're paying
increased,
less,
So their cash is.
so they're paying less,
Yes,
so
their
then,
cash increased, because,
Yeah, that's possible. We don't-
but I was looking at it
Yeah,
from their cash increasing. How that's related.
okay.
Did Todd have a comment?
Yeah, so I think you're all on track. For those of us who are managing the financial statements, we receive a report from URS, which determines our proportionate share of the URS position with regards to the UWAL or the unfunded liability. And that's a calculation that they do for us. And then we capture that in our financial statements. And when you go back 10 years, so if you're going back 10 years to more recently when URS has identified that the rates can go lower because they're catching up that UWAL faster more recently. 10 years ago, it was a big deal. And our proportionate share of those unfunded liabilities had to show up on our balance sheets. And it does wash down into the net position. And that changes from year to year depending on demographics and the payrolls and et cetera. There's a lot of moving parts that can change your proportionate share of the unfunded liability of the state.
Thank you, Todd. I knew you would have some types for us.
Can I ask a clarifying question then? So just so I understand, that's a changes that sounds like a positive thing, that the situation is getting better and that's flowing down into the net position number. Is that what I'm hearing?
It can change either direction. It all depends on your specific entity's share of the overall URS unfunded liability.
But we're trying to figure out why these numbers are going up, and so that's what I'm trying to, can I make that assumption, Todd, or are you saying you can't make that assumption?
I think the question was with regards to change, and change could go either direction. So I don't know that you can categorize it just as a upward trend.
Okay.
But Alex saw more numbers, so I'm speaking more from my experience with my LEA and a couple others.
Yeah, it was only mentioned by, I think, 3 or 4 that I've seen so far. So not all of them were mentioning it, but I think probably our larger districts would come up there more often. Then a few referenced designated savings by the state board for special purposes as for why they have to retain more money. And quite a few basically just said, we've been too conservative on our budgeted spending, which was interesting. Housing authorities, there's a lot of reasons here, it looks right. Obviously some overlap. This is from the Utah Housing Corporation, so I thought this was a good summary. But just due to interest rates, a lot of craziness in finance writ large, that's led to a lot of craziness in the net position. Then some additional ones that have not been discussed by the task force that I wanted to bring to your attention. For our health departments, districts, and some of the interlocals, they've increased their net position due to an increase in Medicaid eligibility and services provided. So that was interesting. Oil royalties got referenced by 1 or 2 of the districts. And, oh yeah, I talked about that one on there. It's also important to note that quite a few survey responses indicated that there wasn't a trend. Here's some examples of those answers where some people are just saying, we've had volatility up and down. We're not having a strong positive trend or a strong negative trend. So I think it's important to recognize, well, maybe as a whole, we can say things are going up. That's not necessarily true for every single entity. All right. Any questions so far on that survey analysis? Okay. Cool. So that was just question 2, right? We have quite a few other questions. Let me.
Are we planning on going through all questions like that or?
Well, that's what I wanted to pivot to next. So some of these questions are little like us trying to get data, right? Where we say, hey, what was your net position for the last 10 fiscal years? And right now I have some scripts running that are going to be pulling all those data points out. Little oversight on my end. People will submit that in very different formats. So I was expecting a nice little list. So it's just taking a little more work to pull out, but I'll have that all pulled out probably in the next couple weeks, definitely before our next meeting. So I'll do that for these other questions, but I think for the remaining qualitative questions of what we're asking for, what are the trends? What do you think? What would you attribute this to? Those kind of things. I think I can do a little bit of that work, but it'd probably be good for the task force or a group that's actually doing the study to look at some of these responses, because the other thing that jumps out is almost every entity has kind of a unique situation. This entity is doing a capital project. This one is getting some different kind of tax revenue. Obviously, there's some overlap and some things that emerge, but it's really important to probably recognize almost every one of the governmental entities is a unique little story for why they're increasing those groups. So I'm happy to help with some of that analysis, but it probably will take and require more people.
As Alex's boss and over his time allocation at this point. My concern at this is we would like it to be useful for you. If you would rather just have the raw data and able to look at it, we're happy to just give you the raw data. As Alex points to, every situation, and I think I'm having a broken record in saying this, every entity is different in what their balance sheets look like and the reasons why their balance sheets look like that. Every situation is slightly different. So it's hard to aggregate some of these into the trend. We can give you a lot of information in the state auditor's office, but we try to stay hands off on what it all means. We're not here to tell you what it means at your job. So we'd like to give it to you and it's in a format that's useful. However you want it, but
we have both the spreadsheet as well as a PDF with all of the individual responses, and I can pressure both of those with the members list task force.
So Brittany, I don't know if it would be appropriate, but I know you had downloaded all the responses into ChatGPT.
Yes.
And it kind of spit out some pretty good analysis, I would say, on the.
Without having gone through it like Alex did, like hard to verify.
So
findings, but they were
don't know if it would be
interesting.
helpful to share, that the ChatGPT response on the.
I think that could be helpful, definitely to leverage some AI, but you'll definitely want a second set of eyes on it. And
Sure.
I would say if you did it by question, you'll probably have better inference than if you do the entire answer, like all 24 questions.
Okay. Well, the insights it gave us, I thought were pretty helpful.
Aligned with some of the.
Yeah, I mean, it
some of
aligned with
our-
what you were talking about there, Alex, so.
For example, some of the things that it derived as possible trends. So federal stimulus as a key driver. It says that organizations attribute spikes in cash reserves and net position to federal COVID stimulus and COVID and related stimulus. Inflation and economic volatility. Multiple responses highlight inflation-driven increases in sales tax revenue, but also higher operating costs. Entities express concern that another round of inflation or a recession would force adjustments to reserve spending. Another one is infrastructure and capital projects. So report large capital projects like schools or water systems, as driving fluctuations and balances. Long-term planning also involves strategic reserve accumulation in advance of those major construction projects, followed by drawdowns. It said the conservative debt velocity, so this is probably where some of that school board the board direction is coming from. But they said their preference is to avoid long-term borrowing when possible, using reserves and cash to fund projects. when debt is issued, emphasizes maintaining strong credit ratings and meeting or exceeding bond covenant requirements. And I know that we've had some discussion in this group as to rating requirements on days cash on hand and other metrics there. Reliance on PTIF and investment income. So PTIF has been a meaningful factor in net position in days cash on hand. Some organizations note an inverse relationship when interest income's lower and develop revenues higher and vice versa. And they also noted that budgeting investment income is generally conservative due to rate volatility. ChatGPT says that the respondents generally see their reserve levels as about right. Most respondents believe their reserve levels align with operational needs. However, they caution that downturns, inflation, or recession could quickly change this outlook. And then it broke it down into sector specifics. It says that school districts emphasize strategic savings for new facilities and bond proposals paired with conservative cash management. Utilities and water districts stress magnitude of infrastructure replacement needs and the importance of reserves to support long-term capital investment. And then smaller entities like charter schools are reporting little to no unassigned fund balance relying on restricted funding streams. So that's ChatGPT's take of all of the analysis.
Too bad. A lot of that over. Nice stuff. Cool.
I would just like to say as a state auditor that I am sure that they did not mean that they still had COVID funding. I am really sure that they have other sources of revenue that were saved because they were spending their COVID money first.
Yes.
Just for
I'm sure
full
that's how.
disclosure, I am positive they do not still have COVID money in their accounts. That would be wrong.
Right.
Well, from the dashboard and looking at the dashboard, maybe we go there.
Yeah.
Because I think there's some really great information on there. Alex added ratios and
Which section do you want me to start in?
maybe explore by entity. And then, yeah, like if you chose some of the larger school districts, so maybe 5 school districts, so. I just typed in, yeah, there you go.
Churning through a lot of data.
Yeah.
Just run this one locally.
Maybe it's worth looking at this, if you'd all keep in mind what we'd like to focus on for our presentation coming up for public education appropriations in a couple weeks, as well as what we should rely on for the final report. I think that those are important discussion items.
That'll be good to get Todd's input on that. Yeah, so you can see kind of trends here with some of these key ratios with the large school districts, and each of them is going to have a story clearly, but you do get a sense, you know, that I think like on some of the unrestricted cash ratios at the top, those have come down. So cash to expenditure ratio, unrestricted fund balance ratio over time. Those have been
They're
coming
actually
down.
coming down,
Yeah,
which is not what you would have expected, right?
right.
So.
Although it does go with the COVID money narrative, that's been spent down.
Or expenditures have really increased.
Yeah.
Yeah.
What is the date of that? When is the presentation to public ed?
When it October 14th.
October 14th.
Yes.
Are you doing that, Marlon?
I think
The
so.
auditor and treasurer.
Both.
Present that.
Mostly tomorrow.
I was thinking mostly two.
Okay, mostly happens.
What was the coverage ratio that was down a little bit? I'm sorry, I'm trying to understand what these ratios are right there. Right, go back, sorry.
I think it's appreciation.
Government fund revenue coverage.
Yeah.
This one right here.
No. Government fund coverage is the next one down right there.
Right there, okay.
Yeah. So government revenue divided by government expenditure, that's the ratio there. And what these ratios come from, they actually weren't made for this task force. They came from our own fiscal distress dashboard that we use for local governments. We just included them in here for this group. Yeah. So we have a couple standards that Seth Ovison from our office kind of set using different kind of research, and they're not perfect, but they're more geared towards like, you've you've not been managing your entity properly. Let's flag that and have a conversation.
Yeah, that's an interesting one.
Are there other things that you would show us here, Alex?
I was just gonna show you, you talked to me about adding a couple features to the Explore by Bank tab, which I've done. So you can now select all of them at once. It's gonna take just a second. Oh, let's see, it should have. Oh, here we go. It's always a little embarrassing when your dashboard doesn't work when you're showing it to people. Right?
Yeah.
Let's see. Okay, ignore what I said. I got it working on my my computer, but I guess when I brought it over here, it has decided to not work. But long story short, we'll set it up so you can select by banks and show all of them at once instead of just 15 at a time. And there'll be a nice little table down here that will show all the details.
So if you want to select maybe some of the, just a few banks, maybe 5.
Yeah. Oh, let me I know what the issue is. Do this real quick. See if I can get it fixed in just 30 seconds.
Coding on the run, here we go, he's impressive.
It's how we test people's skills, if they can code while they're in a meeting.
No promises, no promises.
Start question.
Yeah.
Sorry, dudes, I usually try and get this stuff all sorted before I hop into a meeting, but I guess I'm gonna do it.
I think you're just flexing.
Howard, you're so hip. I'm impressed you know that. There we go. Now it should work.
Oh my goodness.
Okay, guys, here we go. Now it should do it.
So this is total market value of bank deposits and investments, or what is this?
So this first one is just investments, and what we've done is we've selected all of the custodians and qualified depositories. And so think this first chart, we're just going to be looking at investments. The next one will be deposits.
These include banks and credit unions.
Yep, this includes everybody. And even some weird ones where like the reporter just put like broker or other or something weird. Or internal. But this can be helpful to see like what are the bigger kind of investments. So like Wells Fargo is this big pink bar as an example. Or this next kind of big bar is Zions. Or this purple is US Bank. This pink is, or not pink, but this blue is Principal. So out of that little feature, you can come in here, see the associated market value, cost value, and book value, as well as the year. You can filter these. So like, let's say we wanted to look at NY Mellon. There you go. So out of that little feature, then
Yeah. So,
go ahead.
okay, so this is, so if you have banks up there, but it's just investments. These are like CDs, but not. But I think the CDs would be reported in the depository section, so that's why I'm a little confused about what this is reporting on.
Yeah, Treasurer Oaks and I were actually talking about this yesterday. It's a little confusing because you can almost, it's not double dipping, but think of them as two different reports, right? You say deposit investment report, they happen twice a year, but they're gonna contain different information. So the
Well,
investment.
they're either gonna put it up in the depository section or in the investment section. They shouldn't be putting it in both places, right?
Right, but when we aggregate everybody's, you're gonna have on the deposits, they'll reference, okay, we have some kind of CDs, but then for some folks, they're gonna say in investments, it's in their CDs.
Oh.
Yeah,
Okay.
it's just one of the weird
It
nuances.
might
where
be
you-
how they're reporting it, right?
Exactly.
Yeah, okay, because it is self-reported data, so
Yeah.
sometimes there's not.
Welcome to our life, self-reported data.
Yeah.
I'm glad you brought that to the
Yeah.
group's attention,
Okay.
because it is a little weird to
Right,
write.
let's go. Bomb thread it, USU, this might be a real fun night.
I'll see out there.
Yeah, well, if I don't come back tomorrow, you're in good hands with Alex.
Safety. So then if we look at the deposit side by bank, this big one here is the PTIF. So
Yeah, take that out.
transitions well, right? Let's go find the PTIF, unselect it. And now we can see Zions is this larger kind of red bar. Wells Fargo is this kind of pink. US Bank is this purple. Other, right? It is self-reported, so we rely on some of that data and we tried to clean it up.
We're at like what, just over 12 billion?
Yeah.
We're gonna look at that.
Right,
Yes.
but some of those balances might be in CDs that are being reported under the investment section, so. This probably isn't a great source to know exactly how much are invested with local banks, you know.
Yeah, and that's why we need to go through it again and just make
What,
sure.
what
we're
market
comfortable.
for partners and put together is probably a little more accurate in terms of. What we actually have on deposit with banks.
Does he go down to the table? Okay, so it shows. Oh, yeah, by year.
And this one's just aggregating the total. If you want, I could add another table below this, which is the raw data that got kind of grouped, where you can see all the reported lines by entity.
Yeah.
It'll turn into about a, 80,000 row table if you selected all of them. So I'd recommend if you do that to just do one bank or a few at a time, so you're not overwhelmed. But you guys tell me how you need it and we'll make sure that it is available to you.
Okay.
Actually, if you guys are okay with it, maybe I could show you what that raw data looks like a little bit. Okay. All right. So let's take a look at one of these. Okay. So let's say we wanted to look at the investment data real quick.
Oh, treats this stuff like he's in the Matrix. He's like reading it.
I know.
So the investments one, it's about 89,000 rows, and try to ignore some of these scary looking columns. These are just ID fields to help tie data together. But we have the report's year, the custodian safekeeping location, and maybe we could just like pick one. So let's just do like Ogden City. Simple. We'll just look at one entities, and let's just do like June 2018. So we're only looking at one report, right? So this is Ogden City, June 2018. And these are all the associated records with the report. So we would see, and this is just investments. We're not looking at deposits, right? Just investments. We have the security type, the fund assignments, the investment's name, the book value, cost value, coupon rate, current yield, market value, call date, maturity, and some other kind of.
Yeah.
deals.
Because the purpose of the deposit investment report is we're looking for compliance issues, so we want to make sure that what public entities are holding is in compliance with the act. And that they're not out there buying annuities or something, which has happened, right, in the past, somebody gets a friend and, they become the treasurer and they don't know any better and they go buy stuff that they shouldn't be buying. So that's the primary purpose of the deposit investment report is compliance, so that's why we get this kind of level of detail, but it's not necessarily pertinent to aggregating it up.
Right. No, that's really helpful context. So for the investment side, would you want to see this level of detail? Or like one of the banks that gets selected?
No, we don't need this level of detail.
Yeah. So what's the level of detail that would be helpful for you guys?
Your question is level of detail for which category you're talking about?
We went back to this chart and you guys are like, hey, what's making up this? Is it?
Well, I
CD?
think the only thing I think would be helpful here is if we could tell how much deposits we have at the banks, right? That would be helpful, but I don't know how you get it from this data because you'd have to add all these CDs and stuff that are being included down in the investment section. So that's why I'm saying I'm not sure this is the best source for that data.
Gotcha.
Because it wouldn't necessarily give you a true picture of what's on deposit at banks.
Gotcha. Okay.
And it may just be how things are categorized, right? So we could talk through them. Sure.
Well, and anticipating, where we might be focused, the most important thing in my view is what could be viewed as local versus non-local. What percentage of all these funds would you say are being reinvested in our economy locally? And I don't know, I don't think you have that data in here. I mean, it would take some kind of judgment. I mean, even with the deposits, I think there's an issue of, okay, I have a deposit in a bank. If it's a bank that's doing business in 9 states, how do we know where those deposits are being lent?
I think you're right. I think it would just be a judgment call.
And that's why University of Chicago is performing that study, because we realized that required a lot of data that we don't have, so.
Yeah.
I think what we do need to look at is the question of how much have reserves grown and is there an issue there?
Right, that's what we're looking at this data to help answer.
Yes.
Yeah.
Well, and it's also helpful to see how much is on deposit.
I mean, if you combine those two together, then that would tell you how much, both the investments and the deposits are cash reserves, because even the investments are required to be cash equivalents that should count as cash reserves on a financial statement. So to me, you just combine those two together and that tells you what we need to know.
I'm not sure I track that, but I don't know that I disagree either. I know that I'm assuming, like on this screen that we're looking at right now, it says KeyBank NA. That is not a deposit in the bank. That is a corporate note investment.
That's
a corporate note.
Yeah.
So,
Yeah.
This is just investments in this table that we're looking at right
so
now.
this is like a medium-term corporate note that's KeyBank, but it's not a deposit in KeyBank. It's a bond.
Yeah. And that's what I guess what I would say then, just because it says KeyBank, then it doesn't necessarily, that's a different thing. based upon what we're looking at.
Yeah,
So you're not gonna add these numbers to the deposit numbers, I guess is what I'm saying.
No, not those. No, yeah, we need to make sure that they aren't added into the deposits.
Right. This is the same thing as the PTIF from my point of view, right? It's,
Right.
and it looked like the Ogden City, did they not use the PTIF? Is Morrison doing all that work for them?
They probably had PTIF as well. So a lot of the bigger entities will have an investment advisor that helps them structure their own bond portfolio that's similar to the PTIF, but you know, maybe it's a little bit more customized to whatever their needs are, so.
They have
So
some-
larger entities will use investment advisors in addition to the PTIF.
Okay.
We look at their deposits, they have PTIF.
Interesting.
Looks like they got a mix.
Okay, so we'll work with Alex on that.
I think it'd be helpful to get feedback from this group on, based on the dashboard and the data that Alex pulled, what elements do we think would be helpful or most helpful in answering the questions, both for the final report that's due November 30th and the interim presentation that we're giving to public ed on the 14th of October. Which data elements do you think answers the public reserve growth question the best, and what takeaways should we be presenting both on October 14th, but then starting to incorporate into that November 30th report?
What we're trying to. The overall question seems like the reason we're here is twofold, right? Why the increase? And then the question, like that Howard mentioned, of what would the effect be of moving it to local financial institution? So on October 14th, are we trying to give them evidence that yes, that is what's happening, meaning like, yep, there's a trend, and then we're about to tell you what to do about it in December or November, or is it we're telling them what to do about it in October?
There's a trend, and why is there a trend, I think, is what we'll want to report.
But we're not gonna focus on policy recommendations.
Yeah, no, it's not until we have all of our data, because
Got it.
we'll need what the University of Chicago compiles for that final recommendation on that second piece.
When does Chicago get us our?
They finish end of October. And our next meeting is November 3rd. So a large focus for our next meeting will be on the University of Chicago's findings, and then takeaways we want to look at as we begin preparing that final report. And then we'll have one more meeting on November 21st. Our final report is due November 30th. So at that November 21st meeting, we'll hand you a draft and go through that and make sure that it's on point so we can make any changes before it's submitted on the 30th.
So Marlo, do you have what you need to prepare for October 14th?
I think so. Is there anything that this group would like us to focus on or emphasize in terms of trends? So this is public education.
Yeah, that's public.
So we're focusing on public ed piece of the question.
Interesting. Well, I mean, I think you just present things I found most interesting. I mean, again, just laying out the trend in terms of reserves, and then I think over a period of time, I don't know if it's 5, 10, or 20 years or whatever. I think the broader picture, the better. But I know there's probably gaps in the data, so I'd look to Alex for what is most, comparable. But I think we should look as broadly as we can in terms of what is the trend, the reserving trend, and ideally, if we could compare it to something like total revenue, or just so they can get an idea of these reserves as a percentage of something relevant. I don't know what Alex would recommend in that regard. And then I do think it's important to look at over the same period is the percentage of reserves that were deposited in financial institutions versus invested, what that ratio has done over that period of time. So they can kind of see what's happening. Our reserves are going up. Are they going up as a percentage of something relevant? That would be important to know. And then where are they being held, in relationship between deposits and investments? I think that's the picture we want to paint. I'm not sure what picture it paints right now, but I'll be interested to see. And then that's probably just the best way to set the table for the policymakers.
Yeah, I like those. I think we could definitely set up some stuff to have it as a percentage of like total revenue or total expenditure. I think some of those ratios already exist. And yeah, just kind of up and lay the groundwork and big picture. I think we could definitely do it.
I mean, I'm still confused, Alex, because we see this number and the number seems to go way up.
Yeah.
But then the number as a percentage of anything, those ratios that you showed, it looked like it was going down. So I don't.
School districts at those 5 ones.
Yeah.
Yeah.
Yeah, that just seems counterintuitive because that would go the same direction, not the other.
Well, let me dive into those 5 school districts a little more, but that one that was going down was their unrestricted cash and cash equivalents. So it could just be that they've committed it or put it towards other kinds of things that, okay, cash has gone up, but we have it with some other kind of legal.
So they're restricting it for a future capital project, or
it could be, there's a lot of
reasons. Restricted ahead of time like that, I guess you could, right?
It could depend. Yeah, there's certain things like this is coming from higher ed, so it'll be a little different than some of the school districts, but like maybe they received a lot in donor money that they like reinvest. So it's restricted cash that has a specific purpose, like maybe that's scholarships or a building.
Yeah.
So that might explain some of it. We know with inflation that revenue and expenditures have gone up for pretty much every governmental entity. So if that number's going up and then there's more restrictions, that could explain the downward trend for that ratio, even though unrestricted cash is going up.
Yeah. I don't think you want to present to the legislators something that doesn't make intuitive sense. So if you show the number of the total reserves, and that's the premise for this study, and then maybe you have to show restricted and unrestricted or something so that in the end you walk away with a narrative that makes sense. But what I saw today left me confused a little bit. But I think that's probably as ambitious as we can get at this point with the interim committee.
I think that's good feedback.
Yeah. It's helpful.
So what is happening with reserves? Here's this big increase, and then what is it made of? Restricted, unrestricted, and then where is it being held? How is it being invested? And that probably sets up the next meeting with the Chicago report as good as anything. And you'll have Alex there, I assume, because you're going to get a lot of questions that only he's going to be able to answer.
I hope so. We actually have our executive appropriations committee at the same time.
Oh, no.
Nice. So, but I'll work with Tina. We'll make sure you guys are prepared. I'll either be there or someone will be there. I promise.
I thought the Chat GPT stuff was pretty interesting too, Brittany. I mean, it wasn't bad. My guess is that's pretty representative, but
Yeah, let's see.
All right, anything else, Alex? All right, our next meeting will be November 3rd. And when we meet as a group, of course, we'll have that public entities meeting, interim meeting, beginning of October. Let's see, is there anything else that we have in October? We've got the report due from the University of Chicago at the end of October. And that's what we will we'll review that on November 3rd. Anything else?
And then also on November 3rd. So again, if you all just make sure that you're comfortable with this, the data, so we can start discussing what we want to include in the final report on November 3rd to get direction, so we can finish that before November 30th deadline.
Yeah. Is that final reported to any particular committee?
Executive appropriations. Yeah, well, we have to submit it to them on November 30th, and then they'll schedule us whenever if they want clarification.
Okay.
So.
And Marlo, can you just make sure that the guys in Chicago connect with the guys at the Department of Financial Institutions so that we don't have any kind of data incongruence on those?
Yeah, we'll do that.
I see nods.
Yeah, happy to connect directly. And I just want to clarify, since this is a public meeting, as the bank regulator, capital is kind of a critical thing. But as far as the 42 banks headquartered in Utah, that's 35 state charter and 7 nationally chartered banks. All 42 report capital ratios that are in the well capitalized category, and just don't want to.
Yeah, and Dan, I think that was due to some adjustments made by analysts, by some of our analysts. So I think when we scrub those, we're going to end up more on the well capitalized side.
Okay. Yeah, sounds
they
good.
were, yeah. The FDIC numbers you are correct. They are well capitalized.
Okay. I just want to be careful. There's not something coming out of a public meeting that says 5 Utah banks are significantly undercapitalized, but yeah, appreciate that. And we'll chat offline. So thanks.
Great. All right.
Thank you, Dan. I appreciate that. It's the first I've ever heard anything like that. So thank you.
And I'll just say Utah banks are usually around the highest or strongest capitalized in the country. And I'm happy to talk about that. But overall, our banks are very well capitalized, and typically we're several hundred basis points above the nationwide median or average, depending how you look at it. But Utah banks are have strong capital. And so just want to clarify that. Thanks.
Perfect. Excellent. Well, thank you all. If there's nothing else, I will adjourn the meeting.
All right. Thank you.
Thank you.
Yeah. Okay.
See ya.